In the last 35 years, since I graduated in 1988, 10,000 banks in the USA have either failed or had to be combined with stronger balance sheet banks to work out bad loan portfolios. That's 10,000 banks in the USA that have disappeared in 35 years. What do you think the trend is? The math is on your side. Own the hardest asset ever introduced to mankind, called Bitcoin, because if you measure Bitcoin in a debasing fiat currency, it's going higher.
Today we have Bitcoin maximalist Greg Foss giving us his latest prediction for Bitcoin and his opinion on BlackRock shaking up the crypto market in the last part of the year. Bitcoin is sitting at just over $42,700, up almost $5,000 just in the last 30 days alone. Foss discusses how Bitcoin will outlast the fiat money system as the value of the dollar continues to decline. Although the market may have played a role in some of Bitcoin's recent price volatility, decreasing fiat currencies will eventually act as a catalyst for Bitcoin to rise. He predicts Bitcoin's market cap will overtake gold and will become the preferred store of value. Greg Foss talks about how the dollarization of fiat money, as well as the surge in money printing, will affect Bitcoin's future. Let's listen to the latest interview with Greg Foss as he gives his prediction for Bitcoin and why financial markets are on the verge of a complete system collapse in 2023. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
I'm very bullish, and I don't believe the FUD actually reflective of the true risk. The only thing I'm 100% certain of is fiat debasement. Everything that I do in life is about mathematics and probabilities, expected value. You said billions of dollars of bonds. That's a flattering intro, but here's the truth. A good day, I would trade $1 billion. Okay, like on one day, I would do that. Not that I traded billions of dollars of treasuries. That's easy to trade $1 billion of treasuries. But trading $1 billion of some esoteric credit instruments, that's more difficult. And you got to be right in the meat and potatoes of the financial markets to do that. I didn't do it on a regular basis, but I could certainly think about 4 or 5 days in my career that I traded over $1 billion of esoteric credit instruments. You need to understand, people, there is no certainty in financial markets, except, again, mathematics will prove that fiat debasement is 100% certain. And you can't argue with math, okay? Math is the base layer of language, because if you measure Bitcoin in a debasing fiat currency, it's going higher because the unit of account is going lower. You're not making money on your house, okay? Absolutely not making money on the value of your house. The value of a roof over your head has never changed, one iota. What has changed is the unit of account that measures the value of that account, that house, okay? Understand math, mathematics, not FUD, not BlackRock's going to attack the hardest asset. Why would BlackRock attack the hardest asset? To destroy any value that accretes for itself? Think about the probabilities. Yes, it's not a zero probability, but it is not an attack vector that is planned. I need people to play probability analysis. Understand that it's a distribution of outcomes where you have tail risks on both ends. You're supposed to play the most likely outcomes, not these tail risks. You can hedge against the tail risks, but don't go to the newspaper and say, I'm 100% certain about this tail risk that has, I don't know, less than 2% cumulative probability. You guys don't get it, okay? You just don't know how to manage risk. So have fun being a slave to the Fiat Ponzi.
With a giant spotlight on Bitcoin ETFs, Foss highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
In 1988, when I graduated from school in an upstate New York Ivy League school called Cornell, there were 15,000 banks in the United States. 15,000. Okay? Now, contrast that with the attic of the United States, which is my country, Canada. We're a long, thin ribbon. We only have 6 banks. They span the country coast to coast. But due to different regulations in the two countries, like interstate banking rules and community banks and whatnot in the USA, there were 15,000 in the USA versus only 6 in Canada. Damn, that's a pretty big structural difference, right, between the two countries. Which is to say, though, Sean, today in the United States, there's about 5,000. Which is to say, in the last 35 years since I graduated in 1988, 10,000 banks in the USA have either failed or had to be combined with stronger balance sheet banks to work out bad loan portfolios. That's 10,000 banks in the USA that have disappeared. I'm anticipating that the US will settle out with a banking system somewhere, dare I say, below 500, but above 100 USA banks, which means they're going to get a lot bigger. There's going to be a lot more concentration of risk in the US banking system. And most importantly, there will be an implied, and this is where it's key, too big to fail. The banking systems in both of our countries are already too big to fail. Any one of the 8 national banks in Canada are too big to fail. The government has an implied backstop on any one of them because the contagion to the remaining 7 banks would be so severe that it would cause the rest of the banks to fail if the government didn't backstop the banking system. How do they backstop it, Sean? With the ability to print money. So banks, which are levered 25 times to their equity capital base, that's the leverage of a common bank, which is to say their risk-absorbing capital is 4 cents on every dollar that they lend. That means they lever their risk-absorbing capital or equity 25 turns. See, that's how you create money, is through the banking system. So the banking system is the Fiat Ponzi transfer mechanism, which is to say banks in the United States will continue to consolidate or fail or get what's called a take under. And in USA in the last 2 months, there was a amalgamation of 2 California banks, PacWest and Bank of California, where Bank of California took over, in air quotes, took over PacWest at a price that was under the trading value on the open market of PacWest stock. See, they had to do that, and PacWest had to accept the take under, not take over, take under, to combine 2 weak balance sheets into something that was more robust by eliminating duplicity in the system of banks. Get rid of all the back office of one bank, you can increase the profitability margin, etc. But now you have 2 zombie banks merged into one that eventually will be acquired by another bank because it still won't survive.
Despite market volatility, Foss still sees Bitcoin hitting a minimum of $2 million in the near future. Time will tell how soon these things happen. But what are your thoughts? Do you agree with Greg Foss's forecast for Bitcoin in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.